What if I told you that your life insurance policy could be more than just a safety net for your family? It could also be a tool for building wealth and accessing cash whenever you need it. Did you know that 23 million Canadians own life insurance coverage, totaling $5.7 trillion? And a significant portion of that coverage could be available to policyholders right now. Now imagine using your insurance policy to fund your next big business idea, take a dream European vacation, or even cover unexpected expenses, all while your policy's cash value continues to grow. Intrigued? We'll cover how this can be done in today's video. Hello and welcome to Dundas Life's channel. I'm Gregory Rozdeba, the CEO, and I've spent several years helping hundreds of Canadians navigate life insurance protection for their families. Today we're going to explore a powerful yet overlooked tool of life insurance: policy loans. Before we dive in, don't forget to subscribe to our channel for more informative and engaging content about life insurance. We're constantly releasing new videos to help you make the most of your financial planning, and hit that notification bell so you don't miss anything. So what is a life insurance policy loan? Let's start with the basics. Certain types of life insurance, primarily whole life insurance and some types of universal life, build up something called a cash value over time. Think of it like a built-in savings component or a separate account within your policy. This is separate from the death benefit your beneficiaries receive. As you make monthly insurance payments, a portion goes towards this cash value, which grows tax-deferred, a huge benefit here in Canada. This means the growth isn't taxed year after year like it would be in a regular investment account. It's allowed to compound and grow much faster. Now, a life insurance policy loan allows you to borrow money from your life insurance policy, using this accumulated cash value as collateral. It's like borrowing from yourself, but with some unique advantages. This can be a useful option for covering unexpected expenses, investing in opportunities, or even financing large purchases. We'll get into specific examples later. So, how does a life insurance policy loan work? Let's walk through the process step by step. If you decide you need a policy loan, you can simply contact your insurance company, or you can reach out to Dundas Life directly. We'll make the process simple by connecting you with several insurance companies, helping you with a plan that best suits your needs. Then you'll fill out a simple request form and the insurance company will process it. Typically, this takes anywhere from a few days to a couple of weeks, much faster than most traditional loan applications. Now, like any loan, there's interest involved, but here's the good news. A key difference between loans from a bank and loans from your policy is that policy loan interest rates are often significantly lower than what you'd find with personal loans, credit cards, or even lines of credit. Why? Because the loan is secured by your policy's cash value. The insurance company has very little risk, so they can offer a lower interest rate. And the repayment? It's flexible, as there's no fixed repayment schedule. This is a major advantage over traditional loans. You can pay it back in installments, lump sums, or even deferred payments. It's really up to you. However, it's important to remember that unpaid interest will accumulate and will be added to your loan balance. We'll discuss the implications of this in just a minute. One of the most important and often misunderstood features of policy loans is that your cash value continues to grow even while you have an outstanding loan. Your policy continues to earn interest and potentially dividends even while you access the money using a loan. This is very different from taking money out of an investment account like a tax-free savings account or registered retirement savings plan, where you lose the potential for future growth on the amount you withdraw. With a policy loan, you're borrowing against the cash value, not from it directly. The insurance company is lending you their money, using your cash value as collateral. Let's illustrate this with a simple example. Imagine you have a policy with $100,000 in cash value, and you take out a $60,000 loan. Your cash value still earns interest and dividends on the full $100,000, not just the remaining $40,000. This is a powerful engine for wealth building. Now let's talk about the benefits in more details. We've touched on some of these, but let's really unpack them. First, Liquidity and accessibility. Life happens. Unexpected expenses come up, a medical emergency, a job loss, a sudden home repair. On the other hand, opportunities arise, a chance to invest in a business or a real estate deal, or further your education. A policy loan gives you quick access to cash without the hassle of a traditional loan application, credit checks, or lengthy approval process. You don't have to explain your situation to a bank. You're simply accessing your own policy's value. Second, tax advantages. In Canada, policy loans are generally not considered taxable income. This is a significant advantage compared to, say, withdrawing funds from an RRSP, which could be taxed as income at your marginal tax rate. Or even a TFSA, where while the withdrawal is tax-free, you lose that contribution room until the next year. With a policy loan, you're accessing your money without triggering a taxable event. 3. Wealth preservation. Because your cash value continues to grow, you're not sacrificing long-term growth potential for short-term needs. In fact, with a well-structured policy, the growth of your cash value can potentially offset the interest you're paying on the loan. This is a key concept. You're leveraging the growth of your policy to cover the cost of borrowing. 4. Flexibility. We've already mentioned the flexible payment schedule, but it's worth emphasizing again. You have control over how and when you repay the loan. This can be incredibly helpful in managing your cash flow. 5. No credit checks. Your credit score is irrelevant. The loan is secured by your policy's cash value, so your credit history doesn't come into play. 6, and this is a benefit that's often overlooked, is the potential for policy loans to help you build wealth over time. While it might seem counterintuitive to borrow money to build wealth, the key is the continued growth of your cash value. If the cash value rate of your cash value exceeds the interest rate on your loan, you're essentially leveraging your policy to create a positive return. This is a more advanced strategy, and it's important to work with a financial advisor like the team at Dundas Life to ensure it aligns with your goals and your risk tolerance. We can help you model different scenarios and see how this could work for you. Let's consider some more real-life examples so you can really understand the power and versatility of policy loans. Car purchase. Suppose you're looking to buy a car and you need $50,000 to cover the purchase price. Instead of taking out a traditional car loan with the dealership, which might have a high interest rate and a rigid repayment schedule, you could borrow $50,000 against your life insurance policy. This way, you can preserve your wealth, your cash value keeps growing, avoid paying higher interest rates, and have flexibility in repayment. Debt consolidation. Perhaps you're looking to consolidate high-interest credit card debt. A policy loan with its typical lower interest rate could save you a significant amount of money over time. You can use the loan to pay off your credit cards and then focus on repaying the policy loan at a lower rate and on your own terms. Unexpected expenses. Maybe you're facing unexpected home repairs, medical bills, or a period of unemployment. A policy loan can provide a safety net without forcing you to deplete your emergency savings, rack up more debt on credit cards, or take out high-interest payday loans. Business opportunities. Let's say a fantastic business opportunity presents itself. You need capital to invest, but you don't want to liquidate your existing investments or take on a risky business loan. A policy loan can provide the seed money you need while other assets continue to grow. Real estate investment. Policy loans can be used to fund a down payment on a rental property or to finance renovations that increase the property's value. Again, you're leveraging your policy's cash value to create additional wealth. These are just a few examples, and the possibilities are vast. The key is to think of your policy's cash value as a strategic financial resource. Now, let's address some common misconceptions and concerns that people have about policy loans. These are important to understand. One of the biggest is, what happens if I don't pay back the loan? It's a valid question. If you pass away with an outstanding loan balance, the insurance company simply deducts the loan amount plus any accrued interest from the death benefit paid to your beneficiaries. Your beneficiaries still receive the remaining death benefit, but it will be reduced by the loan amount. So it's important to consider the impact on your beneficiaries when taking out a policy loan. Another misconception is that you're robbing your death benefit. While it's true that an outstanding loan will reduce the death benefit, remember that your cash value continues to grow. In many cases, the growth of the cash value can offset the loan interest, and over time, the death benefit can even grow larger than it would have been without the loan, depending on the policy's performance. It's also important to understand that not all policies are created equal. Whole life insurance, with its guaranteed cash value growth, is generally the best option for policy loans. And in whole life, there's the concept of direct recognition versus non-direct recognition, which affects how dividends are credited when you have a loan outstanding. Direct recognition policies may reduce your dividend when you have a loan, while non-direct recognition policies do not. Some universal life policies may offer loans, but the terms and conditions can vary significantly. We can help you understand these nuances and choose the right policy for your needs. Finally, remember that a policy loan should be a part of a well-thought-out financial plan. It's not a magic bullet. It's a tool that, when used strategically and responsibly, can be incredibly beneficial. It's important to work with an insurance advisor to understand the risks and rewards and to ensure that a policy loan aligns with your overall financial goals. At Dundas Life, we're committed to helping you understand your options and make informed decisions. If you're intrigued by the possibility of a policy loan, or if you have questions about life insurance in general, we'd love to hear from you. Click the link in the description below to book a free, no obligation consultation with one of our expert advisors. We'll take the time to understand your needs, answer your questions, and help you determine if a policy loan is the right fit for you. We can run personal illustrations to show you how a policy loan might work with your specific situation. Don't leave this hidden treasure untapped. Take control of your financial future. Schedule your consultation today. In summary, life insurance policy loans can be a powerful and versatile tool for accessing cash when you need it, without sacrificing the long-term growth potential of your policy. By understanding how they work and how to effectively use them, you can make the most of your life insurance policy and achieve your financial goals. Remember, this isn't just about death benefits, it's about living benefits. If you have any questions or would like to learn more about life insurance policy loans, don't hesitate to reach out to us. And if you found this video informative and helpful, subscribe to our channel, share it with your family and friends, and drop a comment below. We hope to see you in the next video. Thank you for watching.